Welcome back to another video, guys. Hopefully you guys are doing well. A little bit of a trade recap from today. It is a no news Monday. I ended up taking trades on some evals today. So this is not, I did not take any of these trades on my live account because it is a no news Monday. But we ended up taking two really nice wins on the live with the mentorship. So I kind of want to run this through you guys and kind of give you guys an insight of some things that I've been recognizing recently, like with my own trading with the market, and just some words of advice and kind of words of wisdom that we were talking about with the group. So let's jump in. I want to run you guys through my bias going into the day and why I ended up taking these trades. So first and foremost, kind of going into the morning, the bias really all starts from what happened from Friday. So let me take these executions off for now, and we'll kind of rerun through all of this price action. We'll take all these drawings off. But going into kind of the day and what we were talking about last night is, we'll take a look at ES here first. From Friday, we ended up having a big sell-off on Friday and running through this daily fair value gap. Internal buy side ended up getting taken. We ended up leaving the external buy side level intact, which was this high. So internal high got taken. We displaced 4-hour fair value gap here. We ended up then having internal manipulation in the 4-hour fair value gap, took the high, and then the rest of Friday, pretty much we ended up just dumping through this daily fair value gap. So going into the morning, where price was here is I knew that once this daily fair value gap gets ran through, what is going to be the drawn liquidity, right? Internal high gets taken, daily fair value gap gets ran through. The drawn liquidity has to be the next recent form of sell side. And so the next recent form of sell side on ES is these relative equal lows here, which acts as low resistance liquidity. So going into the day, my drawn liquidity was bearish. My bias was bearish. Now, one thing that I talked about as well, though, is when we have this kind of price action, right? When we're in this area, I have no idea if we want to rebalance to this fair value gap, if we want to rebalance all the way back higher, if we just want to like dump. I have no idea. So you might be saying, Justin, then how do you take a trade? How do you overlap the buys? And the thing that we have to do is be reactive to what the market shows us in this range. Because when we think about a market maker sell model, right? Because that's basically what this is going on, right? If we were to draw this and like simplify what's actually going on, we have a market maker sell model. We have our smart money reversal, manipulation, displacement, change in the state. Then this is our internal manipulation. This is our second stage distribution. And then we're looking for our second stage, or this is our first stage. Then we're looking for our second stage to finish to go to sell side. But in this part of the market, I have no idea when looking at just this price action if we want to rebalance to equilibrium or to the fair value gap or just dump. And so the way that we figure that out is by internal recognition of price action. So going into the morning here, and we'll kind of go on NQ and I'll kind of show you guys what the reasoning for this trade was. But a lot of people I saw were a little bit confused on it. So we'll select bar here and we'll go back to open. Now, just by looking at this chart, it's very hard to get a really strong bias here, right? Like there's really not a lot of clarity when looking at this chart to be like, oh, I can immediately look at this and be like, I know what the market wants to do. So when that's the case, I always am looking for what do I need to see to clarify my bias? Well, I'm going to go in and kind of look at, and one thing I noticed going into open is there is a possibility for seek and destroy, meaning London high, London low. Because London ended up taking Asia high and low, I could expect New York to possibly maybe take London and then go back to take London low. So kind of going into the morning here, what I wanted to see is I wanted to see a move higher, go take out London high, and then look to see, again, a continuation towards the external draw, which was my bias going into the week. I wanted to see us roll over because of that daily fair value kept getting ran through, and I wanted to see price go lower. Now, one thing ended up happening here is in the morning, NQ ended up taking this recent high. ES did not. So we did have a bearish SMT going into the morning. Now, what I am looking for, and when this is how my mindset works when I'm going into a day like this, I need more information. And what I mean by reactive instead of predictive, because I always say, if you're a trader, you should be reactive. You shouldn't be trying to predict the market. And sometimes I have no idea what the market wants to do. So going into open, let this play out. This actually internal short ended up playing out right here. But this is where things get important, and this is where I want to really talk about this. At open, what's my mindset? So this is what I'm looking at, and you actually don't even look at this SMT here. This is what I'm looking at. Buy side resting above London high and London low. Most of the time, I would not touch this until either one of these is taken. Most of the time. Today's not most of the time though, and I'll tell you why. So internal sell side gets taken. I'm looking at this saying, okay, internal sell side, we could maybe look to see, a move back higher, go take London, and then I'll be looking to take a short after London high gets taken. So market opens, boom, we get a big move up. All right, hold on now. So we get a big move up. So after seeing this big move up, I'm thinking that this might be change of the state, and I would want to go see us run London high. Because at this point in time, I am waiting for the market to give me information and data to tell me what the draw is. Let me repeat that again. I'm waiting for the market to tell me what the draw is. Not trying to predict what it is. The price action will show me what that is based off of order flow, based off of our imbalances getting respected, disrespected, and what's the overall idea of what I want to see happen. So when I see this going into open and I'm looking at this saying, okay, well, sell side just got taken and we're going to pull back to a fair value gap. So if I'm bullish and I expect the draw on liquidity to be London high, what would happen? Well, we've displaced higher after sell side gets taken. I would expect to see a bullish imbalance hold bullish, right? This last down close candle, right? This is what I would be looking for. We have our last down close candle after this internal high, and this fair value gap I'd want to see hold. But what ends up happening? That's not the case. So when this fair value gap gets ran through, what is it telling me? This move at open is a form of manipulation. So then I readjust the way that I'm viewing this chart based off that knowledge. And what is the way I readjust? Market opens. We run to manipulate internal high to also what? To rebalance to this 15-minute fair value gap on ES. When we look at where ES is, there's a 5-minute and a 15-minute fair value gap here after that SMT was put in the morning. And right at open on ES, market just comes up to go run this recent high. And what's the confirmation that the draw is lower? Like, what's the confirmation that I'm looking for to know that we go to this recent low? 1 hour fair value gap gets ran through, series of down close candles from that manipulation leg gets closed below, and I take a short. So I enter in short. Stop is not up here. It's not up here. It's actually right here. Because at this point in time, when this high gets taken at open, fair value gap gets ran through, I'm expecting this to go quick because it's right at open. We just had a fast manipulation leg. It immediately got inversed, and I'm looking to see a fast move towards sell side, right? But I'm being reactive to the idea of if I was bullish and the market was bullish, it's not to say that if the market wanted to go higher, if the market wanted to go lower, it would do this. That's how order flow works. If we are bullish, we respect bullish imbalances. If we're bearish, we disrespect bullish imbalances and we respect bearish imbalances. If we're bullish, we hunt sell side and react to go back to buy side. If we're bearish, we hunt buy side to then continue towards sell side. So at open, I look at this first saying, okay, sell side got taken. We might go to buy side. We displace, but then we lack the order flow. So then I don't look at this as sell side gets taken anymore. I look at this as market opens, we take the recent high, fair value gap gets ran through, and there's a change in the state. Now, external buy side and sell side is still intact. So what am I still expecting? I know that just by this model alone, we can go take this internal sell side. So I'm not targeting really much lower than this. So I take all off at this point in time. Could I leave a runner? Absolutely. Because I ended up actually re-entering into this position. So market continues to sell off. Here, we pull back to a 5-minute fair value gap. And I can recognize by order flow, there's still size set resting above or below. And remember, our bias going into the day was bearish, right? Because of the daily fair value gap getting ran through on Friday. So going into Monday, I'm looking at this and I want to see a continuation to the downside. So when we pull back to this 5-minute fair value gap, I zoom in and I'm looking at this and saying, okay, if market, again, my brain is the exact same thing. You might be saying, Justin, why are you taking shorts after sell side got taken, right? This is sell side. Why are you taking shorts? What is their market reacting to? What is the market showing me? If I am bullish, what would I expect to happen? What do we expect the algorithm to do? We take sell side, most likely put it in an SMT at the low, and then have displacement to the upside, and then hold bullish order flow. But what ends up happening? We continue to sell off. We rebalance to a 5-minute fair value gap without correlation. Notice the entire morning with ES and NQ to the downside, we are bearish correlated. There's no discorrelation between ES and NQ the entire morning. Market opens, we both take the high, and we continue to sell off. That's efficiency. NQ and ES are inefficient patterns. Now here, once sell side is taken, what do we expect? We'd want to see a divergence to show that like we want to continue higher or reverse and back and go back higher. But what ends up happening? NQ rebounces to the 5-minute. ES does not. Telling me what? We want to continue lower. And it's in alignment with the external bias. So I'm not guessing if we want to go lower or go back higher. I'm reacting to what the market is showing me from this. So internal high here gets taken on ES or on NQ. ES does not end up taking this high. And what am I doing? I'm trading my model in which I always trade. I think the market's going lower. I wait for internal manipulation. High gets taken. I'm looking for an SMT, and I'm looking for a change in the state in the direction of the draw and a fair value gap to get ran through if that's the case. But that's not what I waited here for here. I'm waiting. Once I saw that high get put in, I took a short. Also keep in mind, I really liked the risk on this trade. Really liked the risk because I put my stop at this high and I was looking to see the external low. And I was looking to take profits at the fair value gap and at the next low. And that's what I did. We respected it. I took first part PT right here in the first fair value gap because again, if we did want to retrace back bullish in this fair value gap, I don't know if that was going to hold yet. But based off this information, I just take one con off. I was in 3 cons. Next off right here. And then finally, my full PT was taken here. And to show you again, so you know that I'm not doing this in hindsight, let me right click, boom, settings, executions. Here are the executions from the day. So overall, today was a really solid day, start to the week. Kind of the main thing that I want you guys to get out of this video and kind of out of this recap is the idea of just switching your perspective when it comes to being reactive. A lot of the times we get really attached to what we want to see. We come into the day and like sometimes it's super clear and sometimes it's not clear. And you can't let your conviction, you can't let your confidence get ruined by the idea of, in number one, improbable market conditions, because the last 3 months I've been significantly de-risked. I planned to go into this year and size up, and I haven't been able to. And I'm not going to size up when I know the market is not in probable conditions to do so. I have been very de-risked the last 3 months. I'm waiting for markets to give me more confidence to want to size up again. But one of the things that I've seen people struggle with these last couple months is they've let improbable market conditions ruin their conviction and ruin their confidence in their strategy. And you can't let that really happen to you. You have to understand that in some market conditions, the market is going to always give you opportunity. Now, that opportunity isn't to always take a trade. That opportunity is to better different aspects of your game. And this is what we were talking about last night in the mentorship. I could come into the market, know that it's significantly improbable conditions, and that's opportunity. Well, what is that opportunity? Well, that's an opportunity for myself to grow as an individual so I can build confidence to know if I sit in front of the market, I'm not going to take a trade. And they're like, Justin, how do I build confidence? How do I build conviction? How do I build confidence? Confidence comes from the self-respect and the knowing that if you sit down in front of the market, you can trust yourself to not take a trade. You can trust yourself to be disciplined. You can trust yourself to. But if you make the same mistakes over and over again, how the fuck do you expect to trust yourself? Because you keep blowing accounts. You keep doing all of the same mistakes over and over again. You haven't made a change. How can you ever build conviction and trust yourself? You can't until that you can actually prove to yourself to be trustworthy. So that is what the market is giving you as an opportunity. But you are so focused on making money. You are so focused on passing an account that every single time that you come into the market, when the market's shitting the bed, you keep fucking losing because you're more focused on making money than growing as an individual, growing as a trader, and that is the opportunity that the market is giving you. The market is giving you an opportunity to sit there and do nothing. And most people think that that's a bad thing. Like everybody's perspective of the market when they first start trading is, I want to make money, I want to make money, I want to make money. But little do they know the exercises that take place over time to grow as an individual, to grow as a trader, to build the conviction, to build the confidence in what you're searching for. That is how you get to what you want. To make a lot of money, to gain financial freedom, to really be a trader, be a successful trader, you have to visualize the market as always giving opportunity. That opportunity is not always to make money. It's to better yourself. It's to trust yourself, to be able to sit and do nothing, to trust yourself, to know when to, for example, today, trade on an eval. Like, I'm not looking at these trades and being like, oh, I should have traded them on a live account. No, I'm looking at it saying, I had a plan going into the day. It was a no news Monday. I wanted to trade on an eval, and I got rewarded for trading on an eval. Like maybe I'm going to pass it, maybe get a funded account. But that's not my mind. I'm not looking at this saying I need to make money. I need to make money. I'm looking at this saying what's the opportunity in which the market is telling me and teaching me and molding me, right? And that is the idea of submission when it comes to your trading journey. To be successful, every day is an opportunity to grow, whether it's successful or failure. You are an opportunity to perceive it in a way and how you want to. If you perceive it in a scarcity mindset, and if you are so afraid that you're not going to make money, then you're always going to be constantly looking for opportunity that's not there, and you're going to get burned. If you're in an abundant mindset, you're looking at the market as always giving opportunity. And that abundance is not to make money always. It's to better yourself as an individual, because bettering yourself as an individual, building the trust with yourself, building the relationship with yourself to be able to sit there and not take a trade, that is what will make you money. Not anything else but that. The relationship with you, the conviction you have in yourself, the confidence you have in yourself to know that if you sit down, you'll take your edge, not take anything else. That you'll sit patient and not overtrade. That you'll step away, not sit on the market and continue to dig a hole, right? These are things in which only build confidence by your actions, right? It's just like in a relationship. It's just like a relationship with your spouse. It's just like a relationship with God. The only way that you can trust yourself is through your actions. And the only way that you can build conviction in your trading is through your actions. So instead of viewing the market every single day with, oh, I hate no news Mondays. Oh, I hate this bad price action. No, you should view it and say, today was an amazing opportunity for me to practice my discipline, practice my patience, practice the side of trading that is, if not more important than taking a setup. People don't realize trading is more about doing nothing than it is trading. Trading is more about sitting there, reflecting, in communion and relationship with yourself, with your thoughts. What are you viewing in the market? What do you want to see happen? What are you reacting to? All up into the final decision, if it is taken, to press the button, to take the trade. There's so much more to it than what you think it is. And if you view trading as that, as an opportunity to grow as an individual based off of that is the opportunity, then I guarantee you'll fall into an abundant mindset. You'll grow 10 times faster. You'll see more success. And most importantly, you'll be more fulfilled because your fulfillment no longer now comes from a dollar amount. It comes from personal growth. And when you focus on personal growth then again, diverses into every aspect of your life. Your trading increases, your relationships increase, your business increases, your discipline for yourself increases. Everything else will increase. So it's up to you to decide your perspective of it. Are you going to fall into a scarcity mindset, constantly looking for setups, constantly trying to pass a funded account, constantly trying to improve, or constantly trying to make money? Or are you going to switch it to an abundant mindset and knowing that every single day is an opportunity to better yourself? Every single day is an opportunity to learn something about yourself, to grow as an individual, to practice self-discipline, to build confidence with yourself, to know that you can trust yourself in certain environments, to know that you're capable of more than you think. And that's always an opportunity to grow. So, hopefully you guys enjoyed this video. If you did, make sure to leave a like, subscribe. Again, if you're continuing to struggle with your trading, if you have been struggling the last couple months with trying to get funded account, trying to pass an evaluation, whatever it is, with everything that we just talked about right now, if you're failing that confidence, if you're not having that self-discipline and that conviction to trade, that is why I created Tactical Traders. I've created a mentorship over a year ago. In fact, I've been teaching students now for over 2 years how to trade, how to be successful. I've made over 100 people and over 100 students profitable. I've taught thousands of people. I've made countless YouTube videos on this. If you want to watch me live trade like this morning, this trade was taken on live in the mentorship group. Go down in the description, click the Tactical Traders link. It'll take you to a page that'll give you some more info on exactly what the Tactical Traders mentorship is. But if you've been struggling, you want some extra help, that is the place to go. Yeah. Anyway, hopefully you guys enjoy the rest of your day, and I will see you guys in the next video. Peace out, guys.